Hey, what's up, everybody? Going to do a quick video here, talk about the market. Obviously, it's been a harsh pullback in the past 5 weeks. It's 1, 2, 3, 4, 5 red weeks in a row. From the top of that previous candle, we did drop 9.26% from the top of the market. We are down now 10%. We are in correction territory in the overall market. You know, if you go look at crypto, it's definitely a lot more. It's been in a bear market. Right, overall 51%, not too much movement off of the bottom. It's been choppy. We know we're in a really market headline driven environment. We got Trump trying to stabilize prices with some tweets that Iran and this and that. It's going to be over soon. But the market's been calling bluff the entire time and continuously selling off. If you go look at the shorter term timeframes in the market, any tweet that we've had, trying to calm things down, has just been setting lower highs, constantly setting up lower highs. We've actually just been trending down very nicely up until the end of this week, the past 2 days, when we dropped from Thursday's high update, Wednesday's morning pre-market to the end of the week. We dropped another 4.5%. So we started to see some escalation, and that's what I want to see. I want to see escalation down, because if you stair step down, this could be very nice, slow, gradual process like what we saw in the bear market of 2021, 2022, 2021. We saw a top in 2022 in overall market, but 2021 was the high beta, was the ARC names. They all topped out a little bit earlier. And look at the stair step down, right? If you think about this, this is obviously on the daily time frame, and I was just showing you the 4 hour. What we want is this. We want escalation. We want volatility, strength to the downside. Even here, strong volatility to the downside. You're going to see a significant bounce. I anticipate we're going to see, look at the escalation, right? Last year's bear market. Escalation is good for finding bottoms. That's what you want. You want panic. You want fear. The headlines will change. The noise in the market will change, but the market typically will bottom in advance. So we'll bottom, everything will be priced in, headlines will stop making as much movement to the downside, and then we start to see a gradual process out, then positive headlines come in, and then you see the market rally continue. I'm not changing my stance. I believe we are going to make a huge run in 2026. We are just correcting, and we're in a 4 in here right now, and we're correcting. And based off of the behavior, I would think we're escalating to a bottom shortly. Also factoring in seasonality. Seasonality for me is very important because it puts me in the right mindset of what I'm watching. So if we go look at overall market seasonality, right? March, escalation down. Typically near the end of March, we see a rally and we start to move back up, but we're not seeing that this year. I do believe what we're watching is a bottom being put in place. So negative sentiment, bearish headlines, bearish sentiment. This is all a recipe for bulls to get caught on the wrong side, maybe flipping late into the cycle to the wrong side, and then getting caught like a deer in headlights when the market does reverse. I'm anticipating a reversal. Now, where's the reversal going to come from? This is what I'm not sure. Like we could look at ES and say, well, we're in the right spot in here. We could look at SPX and say, well, actually, we need to come down a little bit further. So if we think about SPX, where we're at right now, and where the potential more downside is to come back down into the zone, we're looking at another 3 to 4%. So I don't imagine we have too much more downside. I'm not anticipating back-to-back bear markets and then 3 bear markets in the past 5 years. That's like unprecedented history to be doing that. You got to go back like to the 80s to see that. Back-to-back bear markets, I think we had in 2008. I'm not going to go into it, but back-to-back bear markets, 3 and 5, I think you got to go back to the 80s, late 70s, early 80s. It's not normal. It's not what we should expect. What we should be expecting is we had a bear market last year. This year, we're just looking for a correction. And we're in correction territory at 10%. I don't imagine we're going to get into the bear market territory, pulling back into an SPX golden zone again. I imagine we are close. We are very nearby. Sentiment sucks right now. That's good. Escalation is happening. That's good. That's what I want to see, because that's when I anticipate bottoms are going to take place. So if we look at NQ, off of this move, right? I think we're in a 4, a correction, and then we're going to go for a big run. So what does that really mean when you're in a 4? I think we're in our ABC right now, that our 5th run is going to happen, and it's going to be huge. We're going to have 5 legs in that run, and it's going to be, I can't say generational wealth opportunity unless you're going to be in the crypto space, because it does look like it will be there. But some of these high beta names that are really reliant on the market to get going in, they will create some generational opportunities. And that's why I got a lot of them on my list. And I'm really keeping them at the forefront of my focus, not losing sight of them and just focusing on the Apples or the Facebooks, because those will give you those short-term opportunities. You will make good trades in those, but those generational wealth, that you're going to have to look at those high beta names that are completely beat up right now, including in the crypto space. So I think opportunity is coming. So NQ, I'm looking at this back test in here. If we do need to see another, 4 or 5%, then you would look at, hey, we're going to come back down into this range where we have this demand set up, and that will line up with QQQ coming for a back test of this range down in here. Okay, there is a gap, a breakaway gap in here as well. We could look at something like that. Again, I don't think it would take too long and too much more downside. Gapping down. So we've seen these gap downs past couple of days. We gap down on Thursday and we gap down on Friday. I like gap downs because it tells me fear, escalation, panic, get ready for reversal. So like just talking about a name that, hey, it's not going to give you generational wealth anymore at this point, but I look at this name as gap down, bearish kicker, another gap down, bearish kicker, getting into extremely oversold conditions. Look at this. Whenever you're in a short-term momentum to the downside, don't use the 14-day, go to the 5, okay? Go to the 5 RSI and just look at this. Look at where we are in relation to how beat up this short-term momentum is on Meta. Okay, look. Oh, let me fix that again. Look at this. We're down at 9.69 in this recent pullback. Look at the history of the stock. 1, 2, 3, 4, 5, 6 touches. 6 touches, Meta. That's how beat up it is. Why am I pointing this out? Names escalating to the downside, okay? And we know why they're escalating, right? We know why these names are escalating. It's not like this thing, it's going to get priced in. Resolution coming out of this, huge opportunities. 14-day, just looking at the 14-day for Meta, and I'm using Meta as an opportunity for, hey, I like escalation. This is a money-making opportunity this week, absolutely. Look at this, 14-day. It's been down here twice in its history. So you want to be aware of this. You want to be aware of these opportunities that are presenting themselves. So the big one for me in looking for opportunity that could create huge wealth, it's right here. Again, it's done it so many times, but right now it's, for me, it's just trying to determine, where is this bottom going to take place? Everything about this zone screams bottom. I've put thousands and thousands of hours into charts, recognizing patterns and behaviors. And everything I've learned tells me this is a buy. This is an absolute buy. Buy zones are huge though, and they're stressful because you're trying to time a bottom in a bear market. Very difficult to do. And every day you're kind of like looking for, okay, here we go, when generally it takes a significant period of time. If you think about how much time it took to break through this level and get a sustained move out of this range, a sustained move took 245 days. Where are we at right now back testing this level? We're at 49 days. Think about that sustained move. It took 250 days. Back testing this level has only been 49 days. And the range is significant because it has a big dip still at the bottom, which brings us down to 47. We don't need to get to 47. I'm looking for the behavior that says we're going to go. We're going to get out of here. And I do have some observations in terms of what are the patterns we're potentially watching in the crypto space, which is really going to be driven on what BTC is doing and Ethereum. And lately, I've been looking at this pattern in here and thinking, this still looks very similar. Now, I do have an observation here. This still looks very similar from our last drop. Okay, even similar from the previous drop, but we had a little bit more extension to the highs. So in here, and this was a minor one, this significant time that we spent in here, when we got the breakout, just like in here, we were immediately sold. And when we sold, we pulled back, we went sideways, and we bear flagged, dumped down. Same thing in here. We pulled back, we went sideways, and we bear flagged, and then we dumped down. Then we tried to create a base for a breakout. We got stuffed, new low, bought up, new low, bought up, stuffed at the resistance, and then we pulled back. And when we pulled back, we had this bear flag, which is currently what we have again. We have this bear flag again, right? So we got a very similar pattern that tells us, be prepared that we can have some more downside. Now, two things I've noticed from an observation here, which I've pointed out in our new community, is that this very much looks like accumulation, schematic, Wyckoff events, and phases. That right there is BTC at 76K. Okay. That pullback afterwards, so this is BTC 76K. That pullback afterwards suggests, and if we look at that Wyckoff pattern, it suggests we would make a new low, but not get follow through. And this makes sense to me. And I've been talking about this since I came back on YouTube. There's potential we make a new low. What happens is afterwards, and I'm not going to go through all the movements, that we actually come back up and we retest this level. There's a couple of theories out there that people believe BTC wouldn't bottom until October of 2026 versus seeing the bottom very soon. And this would be that pattern. Okay, if you look at that Wyckoff scenario, we would come back up and backtest this scenario and pull back further. Again, this would decimate bulls. Like, this would just be extreme frustration before we ultimately get, and I'm just looking at the pattern here. Yeah, oh, I didn't draw it. Looking at the pattern from Wyckoff on my other screen, that we would come up, bear flag, everyone thinks bear flag, push, right? Then get back up into this resistance, right? Freak everybody out, boom. Then the breakout happens. So I was looking back at similar bottoms that we've had in crypto, and it just goes back to 2022. It just comes back here. And this is very similar to what we're suggesting right now. Very similar. We came up, we made a new high, we pulled back, we came to low, we started to try and go back up, we came back and made a new low, we came back up, we stalled, and then we broke out. Very similar pattern to what we're seeing in there. So I want you to be prepared for this. That if we do see that new low in this space, an immediate reversal, then that's what we're watching. We're watching something that's going to take time. It's going to go into the fall, but the bottom is coming. And when the bottom leaves this range, I'm telling you, you will have an opportunity to hit this upper trend line again. We're going to be looking for something like this. And in the long term, we're going to make that run. Potentially much, much more. So short-term trading right now kind of sucks. Everyone's frustrated. There's no money in the market, right? It's just chop, chop, chop. You have to ignore the short-term behavior. You have to ignore how it's making you feel and think about, I got to make money today. I got to hit the next big trade today. Oh, I missed this short. I could have hit this short. I'm looking at this opportunity. This is simply what we had last April. Opportunity. You go back to the market and you think about the runs that the market did when we found that bottom in April. This is where the money's made. You are going to get conditioned by the market to be short-term trading, and eventually the bottom is hit, and you're going to get caught short-term trading when you're missing the opportunity to be a buy and hold. And that's where the money's made. That's where that potential generational wealth is made. The buy and the hold, not the short-term stuff. You're missing, I missed this trade, I missed this trade, I missed this trade. Let this opportunity develop. Let it come to you. Be prepared. Have the mental capital left to participate in that huge run that's coming. I think it starts in April with the overall market. We'll see what's going to happen with the crypto space, even though, we could potentially drag out to October if that's going to be the case. I'm not sure. We'll see. It's a pattern that's visible. Still, the runs that we're going to see within it is going to be great. And then the big runs coming afterwards. Don't blow up in corrections. Don't blow up trying to time a bottom. Save your capital. Save your mental capital. The signals will appear. I like what I'm seeing. I want to see escalation. Escalation's great. We will gap down today, probably. Like I was looking at the weekend US Tech 100 and the Dow Jones. Yeah, it looks like it's a little bit of a lower open, potentially a gap down. If we gap down overall tomorrow and it's a significant gap down, I'm a buyer. I'm going to let this play out. You don't got to be all in. You just get your foot in the door. You add a little bit. Let the time be on your side. No weekly options. No trying to make up what you recently lost. Right? You're like, oh my gosh, I recently lost X. Oh, the market's bottoming. I got to take your time. It's going to be huge. Don't think you got to make it back in one trade, because then you're trying to get rich too quick. And generally that leads to bad behaviors, leads to blow-ups, leads to not being sustainable in this business. I've been trading full-time for 10 years almost, coming up on a 10-year anniversary. I know what it takes. And I understand pullbacks, corrections, higher lows. Sometimes a lower low in your trading account has to happen. It helps you mature, helps you develop as a trader, helps you understand the mistakes that you made so you don't repeat them. How many times have you made the mistake of missing the opportunity when the market pivots because your mental capital was drained, your financial capital was lost, and then you just don't believe anything anymore? Don't let that happen to you again, because the opportunity is here. It's here. We're very close. Peace out, everybody.